afternoon and welcome to BizTech's Asian Midday Market Watch, powered by Smart Investor Singapore. Phan Vee Leung is the founder and CIO of Track Record Asia, and he's our guest today. Now, Vee Leung, great to hear from you today.
Hey, hi, Brian. Good to be on again. Let's talk about markets.
Let's talk about markets, but before we get your insights, let's take a look and see what the numbers look like. We start with crypto markets. Ethereum is at 1,586.26. It's down 2.08%. Tether is at just over 1,000, and it's down 0.07%. Now, looking across the regional stock markets, we've got the SGX, which is up 0.09%. Bursa Malaysia is up 0.03%. Shanghai is up 0.39%. The ASX All Ordinaries is up 0.49%. The Nikkei is up 1.3%. The Hang Seng is up 3.57%. And rounding up the numbers, we've got the Kospi, which is up 0.86%. We've got a sea of green V across the region, with the outlier being Hong Kong, which is outperforming. Tell us why.
What's happening is the follow through from Friday's price action. Asia is tracking what happened in New York on Friday, and what happened on Friday was the jobs data from the US. Right, it was released and it showed that more jobs were added than expected. The market first tried to react to that. US bond yields went higher, stocks went lower because the markets continue to fear more aggressive rate hikes from the US Federal Reserve. However, then they started to focus on the details, where the unemployment rate was 3.7%, which is higher than the previous print of 3.5%. Expected was only 3.6%. But all this means is that the labor market is starting to weaken. Right, one of the key reasons for the U.S. Federal Reserve, what they have been saying is that they are hiking aggressively because of high inflation, as well as the very strong labor market. Right, with unemployment rate jumping 0.2%, that's a big deal, so that caused the U.S. stock markets to rise quite a bit, 1.4% almost for S&P and nearly 2% for the Nasdaq. So as a result, we are seeing more positive price action from the Asian stock markets. But the enthusiasm was tempered a little bit by the rejection by the Chinese government on Saturday that they would be. There were rumors, right? Last week there were rumors that China is starting to lay ground to open up. To relax some of the COVID restrictions. So those rumors were driving Hong Kong and A50, the Chinese stock market index, higher throughout the week. But it started this morning on a weaker note because of that denial. But somehow the market seems to not believe this press conference. They're starting to have rumors that the opening will be stealth opening. They will slowly relax the COVID measures without big announcements. So we are seeing the stock markets in China and US and Hong Kong fighting back as well.
Now, one of the key things is this morning we had China trade data that showed a significant miss in estimates. So its exports fell 0.3%, which is in contrast to Reuters' expectation of a 4.3% increase. Now, imports fell 0.7%. Again, missing expectations of a slight growth of 0.1%. What should we be reading into the numbers?
Yeah, so this is where trading is not as easy as what you watch on social media, right? And it's not anything that can be easily learned from textbooks. The bad news in China now is starting to be seen as good news, because slowing down in the export economy and the trade data is giving cause for the Chinese government to relax the COVID restrictions. Of course, it can be taken as bad news as well, because it is bad news for the economy. But if the economy continues to stay resilient, there's no reason for them to be to be impatient, and they can continue to have their COVID restrictions in place. But because the trade data is weakening, the chorus of voices asking for more relaxation of COVID restrictions will continue to get louder. So we will see rumors getting stronger, and that has been driving the Chinese and Hong Kong stock markets recently, and I believe that will continue to dominate the headlines going forward as well.
Now, one of the key impacts of this slowdown in China is, of course, on oil demand. And we've seen also oil demand on the other side of the equation. There is a tightening of supply because of looming additional sanctions. What's your take on oil markets and in the months ahead?
So you're talking in the months ahead. So I think long-term oil prices will remain high. In fact, possibly go higher, probably go higher as well, because of, as what you pointed out, the supply and demand uh, imbalance, right? So what has been happening since the start of the COVID? I think many people will be confused as to why uh, oil demand has gone up so much, and why uh, supply is not catching up to it, right? By this time, usually there will be more release of supply, but we have the war going on, but also um, in the last few years, the ESG movement has been very, very powerful. So all this carbon generating and investments, uh, it's very hard to get money flowing into these long-term investments, right? Nobody wants to invest in carbon dirty technologies these days, and that is the reason why we are seeing not enough supply coming online now, and possibly ahead as well. And OPEC Plus has shown that it is not afraid uh, to anger the United States, right? US has been asking them to produce more. Recently, their meeting, instead of producing more, they cut supply because they think that the the impending sanctions on Russian oil will cause prices to come off as well. So they've decided to just go along with what they believe is in their best interest, and I believe that sets the tone for the longer term. Oil demand will grow eventually. I think China reopening is an eventuality. It's not going to be forever in under COVID restrictions, and supply is still very, very tight, regardless of what we read in the press, right? Even though, of course, now the concern is a cold winter in the northern hemisphere, but I think over the long term, it is a problem that needs to be solved. And right now, the governments have not shown any initiative to solve this imbalance in the longer term.
Now, as always, thank you very much for your insights and thanks for coming on the show.
Thanks. Take care.
Now, we've been speaking to Phan Vee Leung, founder and CIO of Track Record Asia, on BizTech's Asian Midday Market Watch, powered by Share Investors Singapore. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.